Hello, good afternoon, ladies and gentlemen. Thank you for joining us today for the Trading PTA webinar. I'm Joy from FOW. I'm honored to be invited as a moderator for today's session. Okay, let's see the slides. Today's webinar will be focused on the Chinese Internationalized Futures Contract, PTA. This webinar is organized and supported by Zhengzhou Commodity Exchange, Nanhua Futures, CCF Group, CQG. I would like to take this opportunity to thank the organizer and supporter for the effort to put the event together. So just a brief introduction of PTA. As you see, the white powder here, PTA actually is a raw material of polyester fiber and PET resins, which are used to make our clothes and water bottle and film. PTA is also a petrochemical intermediate derived from crude oil, naphtha, and PX. Therefore, any demand and supply changes in the petrochemical upstream and downstream will have impact on the PTA price. So hedging risk in this volatile market, especially during the COVID-19, is very important for PTA producers, end users, traders, and investors. So we are very pleased to have today a panel of experts from Zhengzhou Commodity Exchange, CCF Group, and CQG to share with us the internationalization of PTA futures, the PTA Industry Chain, and market outlook, and also to explore market arbitrage analysis of PTA futures contracts. We will reserve a few minutes after each presentation and for people for audience here to ask questions. So you can type if you have any question, you can type into the Q&A box. At the end of the session, if we still have some time, you can also ask questions. Let me introduce the first speaker from Zhengzhou Commodity Exchange, Mr. Li Rui. He's from the International Department of Zhengzhou Commodity Exchange. Many audience here should already know about ZCE, but you may not know that ZCE is China's first pilot futures market established in October 1990, which is 30 years ago. ZCE is directly regulated by CSRC. Currently, ZCE lists a wide variety of products covering crucial fields of Chinese national economy across agriculture and industry sectors. Some of the key futures include PTA, rapeseed meal, cotton, cotton yarn, white sugar, methanol, common wheat, strong gluten wheat, rapeseed oil, and thermal coal. Recently, ZCE also listed a few options, include white sugar options, cotton options, PTA options, methanol options, rapeseed meal options, thermal coal options. So now let's welcome Mr. Li to give us details of this PTA internationalization, because PTA futures has been open to international participants since end 2018. Okay, Mr. Li, welcome.
Right, okay. Thank you, Joy, for the introduction. Shall we start with the PowerPoint now? Yep. Right. Good afternoon, ladies and gentlemen. It is a great pleasure for me to give you a presentation about trading PTA. Today's presentation will be in three parts. Firstly, I will briefly introduce the internationalization of China's futures market. The following part will be the introduction of PTA spot market and the futures market. Then I will talk about how to participate in PTA trading and give you a brief introduction of business regulations, including trading, clearing, delivery, and risk management. From 2018, China's futures market was beginning to open to the global market. Currently, crude oil futures and the TSR20 which is known as number 20 natural rubber futures listed by Shanghai International Energy Exchange, iron ore futures traded on Dalian Commodity Exchange, and the PTA futures. They are now available to the overseas traders now. As for the PTA Industry Chain, this diagram shows the whole picture of PTA Industry Chain. We can see that PTA stands in the middle stage. It connects with the upstream petrochemical industry to the downstream textile plastic industry. The whole industry chain starts from the crude oil. Then its downstream product PX is a key raw material for the PTA production. In the industry, producing 1 ton of PTA requires 0.7 ton of PX. Last year, in the global market, nearly 90% of PX was used in the PTA production. In the middle stream, PTA is widely used to produce PET. Some of the most common uses of PET include food and beverage packaging. In recent years, in the global PTA market, more than 80% of production and consumption happened in Asia. According to the Bloomberg report, China has now become the largest producer and consumer of PTA in the world. Last year, over half of PTA global production and consumption were from China. On 18th December 2006, ZCE has launched the PTA Futures. In the end of last year, ZCE listed PTA Futures Contract. Based on this point, we would say that ZCE has provided investors a comprehensive, flexible risk management system. Over 14 years of operation, PTA Futures have built up a stable, mature market. Due to its outstanding performance in China, 90% of PTA producers and 80% of polyester manufacturers are using PTA futures to manage the price risk. According to FIA 2019 ranking, PTA futures contract ranked number 1 in the top 40 other futures and options contracts category, and it has keeping this crown for the past 3 years. In the last 10 years, the trading volume of PTA have witnessed a faster growth trend. In last year, PTA ranked second in China's futures market for its 312 million contracts trading volume and its 1.7 million contracts average daily open interest. PTA are highly correlated with upstream and downstream products. Most of correlations are over 0.9. If we take a look at the historical price of crude oil, PX, and PTA at the left-hand side, this diagram, we can see that in the past 10 years, they shared quite a similar trend. Upward, downward, bearish, and bullish market trend even happened in the same period of time. This could be another perspective to show you the high relativity between them. This diagram at the right-hand side shows the PTA PX spread. The dotted line is the average of the spread. It was quite stable in the past years, which is good news for PTA producers in terms of risk management. As for the PTA futures contract specs, there are 8 key parameters that traders should be noticed. Just like the most China's futures products, PTA futures are denominated and finally settled in Chinese yuan only. The contract will be listed on every month for each year. The contract size is 5 metric ton per contract. The tick size is 2 yuan per tick. To tell you that the tick value is just 10 yuan per contract. So we would say both the contract value and the tick value are very friendly for investors. For the daily settlement, ZCE applied the volume-weighted average price, as known as VWAP, throughout the day, which means it will calculate the average price of a futures traded in the day based on the volume and the transaction price. The last trading day was set as the 10th trading day of the spot month Because ZCE applied the 3-day delivery method, therefore the last delivery day should be the 12th trading day of the delivery month. For the commercial clients, PTA could be physically delivered from warehouses or directly from the factories, depends on the commercial client's choice. For the retail investors, they have to be cash settled before delivery month. Now let's move on to the participation part. ZCE's PTA futures was introduced to overseas traders from the end of 2018. Up to today, there are 198 overseas clients from 15 countries and regions trading the PTA futures. The trading volume from the overseas clients account for 10% of the overall trading volume. In terms of preparation, I would like to introduce the suitability management of ZCE. For both the institutional investors and the retail investors, you have to pass the suitability assessment before opening accounts. Firstly, clients need to pass the online knowledge test operated by China Futures Association to prove that you have the essential knowledge before taking the trading. The second one is capital. In order to prove that the investors have enough money to participate in the trading, the standard is at least 100,000 Chinese yuan or equivalent foreign currency in the margin account for 5 consecutive trading days. Last but not least, clients need to prove that they have futures or options trading experience in the recent 3 years. It could be the trading records or settlement statements. The last one, for retail investors, they have no illegal records or be prohibited from participating derivatives trading. For institutional investors, they should have internal control and a risk management system in order to prove that they have the ability to control risk. When we are talking about participation methods, there are 2 ways for overseas traders to participate in PTA trading: the directive method and the indirect method. For the direct method, which means overseas traders may open accounts directly from the domestic futures broker members. The other one is indirect method. Overseas clients can open accounts through the overseas brokers. Then the overseas brokers will appoint the ZCE's FE members to open accounts for the clients. The only difference is that the overseas clients need to have non-resident account, as known as NRA account, in domestic banks. The non-resident account, as you know, for overseas clients, retail or institutional investors, they are not resident of China nor Chinese legal entity, so they have to open a banking account to settle down their money in China. Just for now, ZCE has collaborated with 9 banks for NRA, as shown on the page. The clients with the direct method should have an NRA account in one of these banks. For the margin, currently ZCE also supports overseas investors using US dollars pledged as margin, but one point should be noticed is that the settlement currency is Chinese yuan only. So you can also use standard warrants or the other assets determined by ZCE as a margin. ZCE has 2 trading sessions for PTA futures: the night trading session and the day trading session. The night trading session in Beijing time is from 9 p.m. to 11 p.m., 2 hours long, and the day trading session is from 9 a.m. to 3 p.m. The converted London time is for your information and reference. As for clearing session, ZCE plays as a central counterparty, which means ZCE will bear the counterparty credit risk between trading parties and provides clearing and settlement services for the futures trading. ZCE adopts three policies. The first one is pre-margin. ZCE will lock the margin for each other. This will guarantee that every client have the capital to complete the trade. The second one is mark-to-market. Like all other exchanges in this world, this adjusts client's balance to control risk. The third one is risk reserve fund. If any defaults occur, ZCE has the money pool to deal with the insolvency problems, especially on ZCE's clearing members. So we are talking about the clearing structure. ZCE shall conduct the clearing for FB members and non-FB members. For FB members, they should conduct the clearing for overseas and domestic clients, as well as overseas brokers. Overseas brokers should conduct the clearing for overseas clients. ZCE conducts clearing for its members in Chinese yuan on a daily basis and sends the clearing results to its members. When conduct the clearing for their clients, members shall submit settlement and sell applications for depository banks for the clearing of gains or losses, service fees, and delivery payment for commodities of the day. And the clearing is regarded as being completed after the depository banks finish the transfer of Chinese yuan. For the margin, you want to choose Chinese yuan or US dollar. So if overseas clients use US dollar as margin, the US dollar should be converted to Chinese yuan with a discount. The discount can be calculated by the equation as shown on the page. The converted Chinese yuan is equal to US dollar times CFA's Chinese yuan central party rate times the haircut. For now, the haircut for US dollar is 0.95. The second aspect is that the clients can use both US dollar or RMB to serve as margin. Only Chinese yuan is accepted for making up losses or the trade. If the customer have gains, they can choose to put this profits in US dollar or Chinese yuan. If the clients choose US dollar as the profit currency, the surplus shall be converted to US dollar daily. It means the clients need to accept the risk of exchange. To accept the risk of exchange rate fluctuation. The change of the profit currency can be only made every 6 months, and the exchange of currency will be used for the purpose of futures trading only. Every day after the settlement, if the customer chooses US dollar as a profit currency, the profit in Chinese yuan will be converted into US dollar automatically. For the futures delivery, retail investors are not allowed to enter the delivery month. Most clients offset or roll forward their positions before delivery. Only a very few part of them will hold their positions to deliver. For example, last year, the delivery volume of PTA only accounts for less than 1% of its trading volume. Though this percentage is very small, it is very important for all traders to understand the delivery rules, as the delivery play an important role on futures pricing. The product must be high-class, PTA conforming to the national quality standard. At the same time, they must be produced by the manufacturers designated by ZCE. Now ZCE have 27 manufacturers, including 19 from mainland China, 3 from China, Taiwan, and 5 from Korea. As for the delivery process, According to the delivery time, delivery can be divided to a flexible delivery and a fixed delivery. Flexible delivery refers to the delivery before the last trading day. The fixed delivery will be conducted after the last trading day. Both of them follow 3-day delivery method. As for flexible delivery, on the first delivery day, as you know, there are sellers and buyers in the market, so we can call them the selling member and the buying member. The selling members publish their delivery intention, and the buying member can respond to the intention through the member service system. Then the ZCE will match the two parties after market close. On the second delivery day, the matched parties will receive the delivery notice. On the third delivery day, ZCE will conduct the clearing for them. As for the fixed delivery, the two parties are matched on the second delivery day. The other process are kept the same. For the delivery factories, there are 24 designated delivery storage facilities and factories for PTA futures. The overseas physical delivery would be conducted in the bonded warehouses located in Jiangsu Lianyungang port. From 2007 to the last year, the delivery volume is 1.4 million contracts, which equals 725 million tons of PTA. Yeah, there is a point we should pay attention to. The overseas clients cannot issue value-added tax invoice, so they cannot dispose the duty-paid receipts. For the overseas clients, they have the priority to get the bonded warehouse receipts during the delivery matching. But if an overseas investors hold a position into delivery month, according to the regulations, they are not allowed to buy or sell these bonded PTA warehouse receipts. As for this problem, ZCE provide a comprehensive platform to help clients to deal with it. So there are 3 solutions. The first one is before delivery matching. ZCE introduces export servicer. For example, if an overseas buyer can sign an agreement with the export servicer, then the overseas buyer can close out long position, and the export servicer can open long positions at the same time. After the export servicer get the duty-paid receipts, they may cancel the receipts and the export PTA to the overseas buyers. During the delivery matching, the offshore buyers have the priority to get the bonded warehouse receipt. If the overseas buyers match the duty-paid receipts, they cannot dispose them. In this case, we can use ZCE's comprehensive business platform. The overseas buyers can put the receipts on the platform for an auction. So, having these supporting measures, we can ensure that offshore clients can deliver PTA in our market smoothly. The last part is risk management. For this part, ZCE treat overseas and the domestic clients equally. So for offshore clients, they should follow the same rules, including margin requirement, price limit, position limit, large position reporting, forced liquidation, and risk warning. Some of them may be different from other exchanges. I will explain them to you. Let's start with the margin requirements. Many overseas markets use a span system to calculate margin, right? And there is a distinction between initial margin and maintenance margin. But for Chinese market, especially for PTA futures, ZCE has only one fixed rate margin. It is also called pre-margin. The minimum trading margin equals the trading margin rate times the last settlement price times the trading unit. Different time may have different minimum trading margin rates. For example, if you hold a futures contract that expires at September, so we call it the TA09, the minimum trading rates at the listing day to 15th August is 5%. From 15th to the last day of August, the minimum trading rates will be 10%, and the rate will increase to 20% in delivery months. The trading margin rate is determined by ZCE and published on ZCE official website, so you can check with that. As a price limit, the price limit is as defined as the maximum price range permitted for a futures contract in each trading day. When price reaches any of these ranges, the market will go limit up or limit down. For example, if the daily price limit of a PTA futures contract is 7%, if the market go limit up or limit down, the price limit on that day on day 2 will increase by 3%. The margin rate of this futures contract will also increase. If the market does not continue to be locked up, the margin rate and the price limit will go back to normal. But if it continues at the same direction on day 2, the price limit will increase another 3%. If the market does not, we would say if the price continues to stay at a limited price at the same direction on day 3, ZCE may adopt the following measures on day 4 and day 5. We may adjust the margin rate and the price limit, suspend opening positions and liquidating positions, such as. For the position limit, the definition will go like this. Position limit refers to the maximum quantity of speculative positions that can be held by a client. Firstly, ZCE has no position limit for FCM, but for non-FCM and the clients, we have 3 levels of time gradient, same as that for trading margin rate. In general amounts, if the open interest of PTA reach 500,000, the position limits shall be 10% of the open interest. If the open interest is less than 500,000, the position limits shall be 50,000 contracts from 16 calendar day of the month preceding the delivery month. The position limit will decline to 10,000. In the delivery month, the position limit for retail investor will be 0, which means retail investor is not allowed to hold any position in the delivery month. For non-FCMs and the clients, the position limit will be 5,000 contracts. For the forced liquidation, if someone's position exceeds the position limit, a forced liquidation may happen. Forced liquidation is a measure taken by ZCE to liquidate a client's positions when they violate rules. The common violations are as follows. The first one is if a client fails to make up the clearing reserve fund when it is below 0. The second one is positions held by a client exceed the position limit. And the third one is retail investors hold positions until delivery month. All these scenarios will trigger the forced liquidation. Currently, for the new products, PX, polyester fiber, and the PET resin are under research and development. According to our non-agricultural department, if everything goes well, the new products will be listed on ZCE in the future. Well, and that's all for the presentation. Thank you for listening. If you have any questions, please feel free to contact the email address below. Also, you can find the PTA brochure and the detailed rules on our English website. Right, thank you again for your time.
Okay.
Hi, Joy. Yep.
Thank you, Mr. Lee, for your detailed introduction of these PTA internationalization rules. I think it's very interesting it's very comprehensive from trading, clearing, delivering, and risk management. Some of the practice, I understand, is quite different from international practice. For example, margin requirement, position limit, or price limit, and trading limit. I'm sure here audience may have a lot of questions, but I understand you have some meeting to attend to, so you have to leave right now, right?
Yeah, sorry about that.
Okay, so thank you again. So if you audience here have any questions, please do email to the email address Mr. Lee showed earlier, and and I'm sure that there will be some other sessions coming up to explain the PTA practice, PTA contract details again. So thank you, Mr. Lee.
Right, thank you, Joy.
Okay, thank you. Yeah.
Right.
So we are moving to as Mr. Lee mentioned earlier, there are two channels for international participants to trade PTA futures in China. One way is to go to the Chinese futures company, which is including, for example, Nanhua Futures. So Nanhua Futures, I think most of us are also quite familiar with Nanhua Futures, but just to know Nanhua a little bit more, Nanhua was founded in 1996 with registered capital of 580 million renminbi. Nanhua is a general clearing member of China Financial Futures Exchange and is a full member of Shanghai Futures Exchange, Zhengzhou Commodity Exchange, and Dalian Commodity Exchange. Nanhua is also a trading member of Shanghai Stock Exchange and Shenzhen Stock Exchange, as well as Shanghai International Exchange. Last year, in August 2019, Nanhua Futures was listed on Shanghai Stock Exchange. Please remember the stock code 603093. So if you have any questions, maybe you can contact Ms. Ling from the International Department of Nanhua Futures. Here is his email and WeChat and WhatsApp number. Okay.